Welcome back to the Construction Accountant's Toolbox. I'm Susan Marinaccio, construction financial strategist and author of The Construction Accountant's Toolbox. This is the Construction Accounting Academy, Module 2, Construction KPI Made Simple. Whether you're a bookkeeper, a project accountant, or a controller, this lesson is built for you. Let's get to work. This is Module 2 of the Construction Accounting Academy, Construction KPI Made Simple. And this is Lesson 1, Understanding Construction KPIs. By the end of this lesson, you'll understand what a KPI actually is. You'll know the 3 KPIs every construction office should be watching. You'll understand why budget compared to actual, the report everyone relies on, isn't enough on its own. You'll learn how the Cost Performance Index works with a real example, and you'll see why none of it matters if the data going in is wrong. Let's start with the basics. KPI stands for Key Performance Indicator. Strip away the jargon, and a KPI is just a number that tells you how the job is really doing, while you can still do something about it. Here's the difference that matters. Your financial statements look backward. They tell you what already happened. A KPI looks at right now. Think of it like the dashboard in your truck. You don't wait until the engine seizes to find out you were low on oil. The gauge warns you while there's still time to pull over. That's exactly what a KPI does for a construction project. So why do controllers lean on KPIs so heavily? 3 reasons. First, catching problems early. A 2% slip on an $850,000 job is $17,000. You want to find that in week 6, not at closeout when there's nothing left to do about it. Second, comparing performance across jobs. A KPI puts a $200,000 job and a $2 million job on the same yardstick, so you can see which one is actually performing. And third, KPIs drive decisions instead of debates. When the number is on the table, the "it feels fine to me" conversation in the job meeting is over. There are dozens of financial KPIs out there, but for a construction office, 3 do most of the heavy lifting. Budget compared to actual. Are we spending what we planned to spend? The Cost Performance Index, or CPI, are we actually getting the work done for the money we've spent? And cash flow, can we pay for next month? Each one answers a different question, and as you'll see, you need all 3 because any one of them alone can fool you. Let's take them one at a time. KPI number 1, budget compared to actual. This is the report everybody already runs, what we planned to spend, next to what we actually spent. Look at this job, budget of $275,000, actual costs of $272,000, $3,000 under budget. Looks great, right? It's simple, it's familiar, and it is useful. But here's the problem. It only answers half the question. It tells you what you spent. It does not tell you what you got for it. And that gap is where jobs go sideways quietly. Here's the blind spot. Same job, 2 very different stories. The top bar shows money spent. 40% of the budget is gone. If all you look at is budget compared to actual, that might seem fine, maybe even good. But the bottom bar shows the work that's actually complete. 28%. You've burned 40% of the money to produce 28% of the job. This project reports on budget every single week, and it is quietly losing money on every day of work. Budget compared to actual can't see this. To see it, you need to connect what you spent to what you got. And that's exactly what earned value does. Earned value is the missing link. It's the dollar value of the work you've actually completed. The formula couldn't be simpler. Earned value equals percent complete times contract value. If the job is 40% done on an $850,000 contract, you've earned 40% of that contract, regardless of what you've spent. One quick clarification before we go further. For today's lesson, I'm using contract value to explain earned value because we're applying it to construction accounting, WIP reporting, and revenue recognition. In formal earned value management systems, the kind you'll see on government or defense contracts, earned value is often calculated using budget at completion, or BAC. That methodology is beyond the scope of this lesson. For our world, contract value works, and it ties directly to your WIP schedule, and one rule that's non-negotiable. the percent complete has to be verified in the field. Walk the job, measure the units in place, talk to the superintendent. A guessed percent complete makes every number downstream a guess too. Let's calculate CPI with a real job. Contract value, $850,000. Estimated total cost, $810,000. Costs to date, $320,000. And the field has verified the job is 40% complete. Step 1, earned value. 40% of $850,000 is $340,000. That's the value of the work in place. Step 2, actual cost, $320,000. Step 3, CPI is earned value divided by actual cost. 340 divided by 320 comes out to 1.06. Here's what that means in plain English. Every dollar this job spends is producing about $1.06 of work. That's strong, realistic performance for a construction project. The crew is efficient, the estimate is holding, and the margin is protected. You won't often see a CPI of 1.3 or 1.4 on a real job, and if you do, check the data before you celebrate. 1.06, that's a job doing exactly what it should. Reading CPI takes about 3 seconds once you know the bands. Above 1.0, you're getting more work than you're paying for. Protect whatever is making that happen. Exactly 1.0, you're right on plan. Watch the trend line because direction matters more than any single reading. Below 1.0, you're spending more than the value you're earning, and it's time to investigate. Now, a quick second example. Same job, same 40% complete, same $340,000 of earned value. But this time costs to date are $350,000. CPI drops to 0.97, 3 cents under. Sounds tiny, right? It isn't. On this contract, that gap is $10,000 already. And if the pattern holds for the rest of the job, it compounds. A CPI below 1 doesn't mean panic. It means questions. Is labor running hot? Did material prices move? Is there an unapproved change order hiding in the costs? Find the cause while it's still $10,000, not at closeout when it's $50,000. KPI number 3 is the cash flow. And here's the sentence I want you to remember. Profitable companies fail. Companies with cash don't. Because cash flow, not profit, is what keeps payroll running. Profit lives on paper. Payroll comes out of the bank account. Construction is uniquely brutal on cash, and here's why. Retainage gets held on every billing. 5 or 10% of your money sitting in someone else's account until closeout. You pay your crews every week, but the owner pays you in 60 to 90 days. You buy materials before you're allowed to bill for them, and change order work gets done long before it gets approved. A company can be profitable on every single job and still miss payroll, because profit and cash move on completely different calendars. That's why cash flow isn't optional on the KPI list. It's the one that keeps the doors open. Now the fine print. And this part is aimed straight at the accounting team because it's where we earn our keep. Every KPI is only as honest as the data behind it. Garbage in, garbage out. 4 things quietly poison the numbers. Missing invoices, costs look low, so CPI looks better than it really is, and you celebrate a problem. Payroll not posted, labor is the biggest cost on most jobs, and one missed week distorts everything downstream. Change orders that never got recorded. The crew is doing extra work the numbers can't see, so the job looks inefficient when it's actually underbilled. And a guessed percent complete. That one collapses the entire earned value calculation. If the KPI looks strange, don't argue with the KPI. Check the data first. So who owns the KPI? The honest answer, everybody owns a piece of it. The project manager owns the percent complete. They're the ones walking the job and verifying what's actually in place. The project accountant owns the coding. Every invoice, every time card landed on the right job and the right cost code. The accounting team owns the job cost data itself. Accurate and current, every week, no exceptions. That means invoices entered, payroll posted, and change orders recorded on time, all coded to the right place. And the controller owns the number itself, calculating it, interpreting it, and raising the flag when something's off. If any one of those 4 links breaks, the KPI lies. That's why this is a team sport. Here's where this is all headed. the weekly KPI dashboard. 1 page, every active job is a row. 4 columns, budget versus actual, CPI, cash. Position D, and the one that matters most, action. Because controllers don't just read reports, they take action. Look at this example. Riverside is under budget with a CPI of 1.08. Stay the course. Coastal is a point over budget, but the CPI says the work is efficient. Just monitor it. And Palm Avenue? On budget. The report everyone trusts says it's fine, but the CPI of 0.97 says otherwise, and the retainage is squeezing its cash. The action column says it plainly. Meet with the project manager. This week, not at closeout. This takes a controller 5 minutes to read, and every row ends in a decision. In the next lesson, I'll show you how to build this exact dashboard yourself. Let's land this. 3 KPIs budget compared to actual, CPI, and cash flow. Each one answers a question the other 2 can't. What did we spend? What did we get for it? And can we pay for next month? One goal behind all 3. See problems while they're still cheap to fix. A CPI of 0.97 in week 6 is a conversation. The same problem discovered at closeout is a write-off, and the payoff is better decisions. Verified data plus a simple 1-page dashboard beats gut feel every single week. That's the controller mindset. Here's where your learning goes next. Lesson 2. Building a weekly construction KPI dashboard. You'll learn how controllers combine budget compared to actual, CPI, and cash flow into one simple dashboard that quickly identifies the jobs needing attention before small issues become expensive problems. It's the exact 1-pager you saw a preview of today, and you'll build it yourself. Continue your learning there, and subscribe on YouTube at The Construction Accountant so Lesson 2 finds you. The website is constructionaccountantstoolbox.com, where the free resource library keeps growing with every lesson. I'm Susan Marinaccio. Thanks for spending this time with me. Remember, you don't have to memorize construction accounting. You just have to understand how it works. I'll see you in the next lesson. The Construction Accountant's Toolbox. Built, not taught. Helping construction bookkeepers become confident controllers.